As Jeremy mentioned, I'm with Business Oregon Business Development Department. A little background on myself. I've spent the last couple of months looking at what other states are doing from sort of the economic development agency standpoint. And it could be those organizations that are public departments at the state level that have statewide programs, or public-private agencies that each state's a little different. Sometimes it's in the governor's office. So I've taken a quick look, and this is the result of that to see what some of the other states are doing.
Can you guys hear in the back?
Louder. A little bit louder?
Yeah.
Okay, a little closer? There we go. So this first slide really, we've covered a range of things, and some of this is very fundamental stuff. For some of you, all of us, I noticed as I was looking at programs, they have a particular focus, and very seldom do they run the whole gamut. So I thought it would be helpful to look at the whole gamut, the continuum. And there's sort of the earlier stage we've talked about, and some of the programs or finance tools that are offered are pre-seed grants and loans, and sometimes royalty and forgivable financing, direct equity, seed venture capital. We talked about some of these fund-to-fund ventures is also a growing area. Tax credit, in fact, the Utah program that was discussed is a fund-to-funds program. Tax credit incentives, R&D, and angel investor, and then metrics are always emphasized, and some states are really good at that. In the later stage, when you get into companies that are farther along, revolving loans, loan credit enhancements, bonds, industrial development revenue bonds are common. Tax credit incentives, both income and property, and also metrics for that. So kind of a beginning effort here. This is something that I stole from Michigan and Pennsylvania and expanded a little bit. And for me, it summarizes the whole process. And it's something that if we're interested could expand on. And it really, on the x-axis, is a time frame at which a company grows and develops. On the y-axis, profitability. And at the top of this shows various different stages. And we've already heard about phase 0, fund, proof of concept, SBR, and those kind of things. And then further along into venture, and then into potential profitability for a company, and who usually provides those sources of funds. So it's kind of a handy reference so we can all, for me anyway, to talk similar language. Different states call these different things, people call these different things, but it relates to where we are in the process, and it's helpful to me, and hopefully it'll be useful. So comparable states. I've looked at those states that are plus or minus 50% on population, those that are clean tech oriented, a number of different factors that and grouped them. And there are about 19 states, including Oregon, that are somewhat similar. Looking at those things, and then there's about another 11 states that are larger states. And because of the difference in size, there's sort of a critical mass, and it does affect resources. But 30 of the 50 states I found to have similar programs to Oregon, at least in later stages, and our opportunities to look at best practice comparisons. And as I mentioned before, they can either be public agencies or public-private organizations, and those that seem to be particularly successful are the public-private organizations that seem to have more of a business focus and are at least more efficient with some of the financing tools as peers. Those states that are shown are at the bottom. So how many states of these comparable states have these programs? 30 states offer grants, loans, and equity. Few states provide direct equity, but more do fund-to-funds. 93% do R&D tax credits, and many have angel tax credits. About 63% are offering those. Later stage tools, and this was as of, these things are changing rapidly, especially in this economy, and this was kind of 2009, latter half of 2009 look. So later stage tools, most offer tax incentives, most have revolving loan programs. All states offer IDBs, the 30 states. Brownfield uses, there's a growing number offering tax credit for brownfield reuse. New market tax credits is a growing area. Ohio and Florida in 2009 added new programs, but about 20% of the states do new market tax credit that stacks with the federal program. And in fact, the last two sessions, I think we've looked at that in Oregon. Loan credit enhancement, about 60%. That's guarantee programs and related. Microenterprise loans, 50% off of those. Capital access program, like we have in Oregon, about 30% of the states offer that. So, back to the model here, what kind of things could we look at from a state perspective? And of course, with the caveat that depending on funding availability and resources, but these are some of the things that other states do and maybe better than Oregon. Increase outreach and marketing for state match amounts for SBIRS CTR grants. Encourage pre-seed startup gap funding, things like foundation grants, loans with royalty payback, corporate partners, increase early stage angel investor incentives. The other thing is encourage networking, angel, and venture. Again, additional early stage considerations are expand fund-to-fund venture. A lot of states, rather than going after the pension funds as a resource, provide state guarantees and tax credit resources to fund these venture programs. And maybe we could look at other alternatives as well. Dedicate innovation funds. Many states dedicate funds. An example is Kansas. Bioscience is an area that uses this a lot, where there's a certain benchmark year. I think in Kansas it was 2004, and all the increments above that are provided to a pot of money. And I think over a 15-year period, they were looking at over $500 million that could be used for anything from very early stage grant funds through venture, through whatever, to help the biosciences. And that resource only came from bioscience salaries. So other things, provide direct equity investment, something we can't do in Oregon because of the constitutional constraints, but other states do that. Quasi-public organizational structures, I mentioned that. Communicate early stage policies and metrics. I think it's important in trying to accomplish any of this. Later stage, existing tools that it should be emphasized or re-emphasized, recapitalized, are listed there. We talked about BETC, SIP, and enterprise zones. The department just hired a study of these three resources and compared that with other states. Not only the tax impact, but also the overall cost of doing business in related programs in what we might call competitor states. And I think that's available for those that want that. Recapitalize current tools. That's happening to a limited extent with the current session with OBDF and some of our business financing tools. Reinforced bond policy. There's a new policy that came out as part of the ARRA program with IDBs, allowing us to expand that over this 2-year period. And I think going forward, we're going to need some additional encouragement to extend that at the federal level. New tools. I mentioned market tax credits, new credit enhancement tools. Some states do direct deposit loan programs which allow reduced interest rates for certain types of targeted businesses. Brownfield reuse, there's a number of practices there that could be helpful. So, this is not a comprehensive look at everything that could be done. It's merely those state programs, other states that are similar to Oregon, and some priority actions that we might take with new funding strategies, looking forward to future sessions and opportunities to develop. So designing those tools and working on what kind of structure, how it's going to be delivered, and potential implementation barriers. And not included an ad here, which we're having an additional follow-on conference. The Council of Development Finance Agencies has been invited to Oregon, and they have their national summit each year in some state, and we're fortunate to have them coming to Portland in May. It covers the broad range spectrum of all of these things we're talking about. It will be a 3-day conference at downtown and the Portland Hilton, and you're all invited. So hope to see you there.